Welcome to CoachFin. I am Nilesh Bodhi, and today we are going to see how we can create a corpus of 1.5 crores and generate 25,000 fixed income for lifetime. So today we are going to see HDFC Asset Allocator Fund of Fund. So what is Fund of Fund? Fund of Fund is a mutual fund scheme that invests in other schemes of mutual funds. Similar to how funds invest in stocks and bonds, the Fund of Fund invests in other mutual fund scheme. So depending on your investment objective, this mutual fund scheme may invest in debt and equity both. So this fund, that is HDFC Asset Allocator Fund, was launched on 5th of May 2021, just a year back. This invests in both equity plus debt. The NAV of this fund is 11 rupees. The AUM is 2165.29 crores. There is no lock-in period in this fund. The exit load is 1% if you exit in 365 days. The expense ratio is 0.09%. As per Riskometer, this is a high risk fund. The minimum SIP which you can do in this fund is 300 and the minimum lump sum is 5,000. The 1 month return is minus 2.57%. The 6 month return is minus 2.57%. 1 year returns is 3.87%, and since inception it has given 8.90%. If we see the asset allocation, then this fund is investing 51.1% in equity, 29.7% in debt, 12% in commodities, and 7.20% in cash and cash equivalent. If we see the top debt holdings, then this fund is investing 14.43% in HDFC short-term debt, 13.30% in HDFC low duration fund, and 3.98% in HDFC floating rate debt fund. If you see the mutual funds, the other mutual fund in which it is investing, then this is investing 16.24% in HDFC top 100 fund, 16.19% in HDFC flexi-cap direct fund, 13.36% in HDFC low duration fund, and 11.89% in HDFC gold exchange traded fund. Okay, let us see the downside protection. If you see the graph clearly, we can see that this fund has given minus 2.88% returns compared to minus 3.38% of category average within a period of 1 week. For 1 month period, this fund has given minus 2.61% versus minus 3.69% of category average. For 3 month period, this fund has given minus 4.8% when compared with minus 7.27% of category average. And 6 month period, it has given minus 3.21% compared with minus 7.78%. And if we see the YTD, then it has given minus 381% compared with category average of minus 8.02. If you see the 1 year returns, this fund has given 2.55%, which is the positive, against the category average of minus 3.61. And since inception, it has given 8.4% when compared to 4.12%, okay, of category average. So as we can see that when the market is falling, this fund is also falling, but this fund is falling less when compared with the market. We have to understand one thing very clearly, that this fund has started just last year, very recent. So to get the right parameters for this particular fund and to check the returns, we have to see at least 3 year period. So we have to give some time for this fund. So we will keep on reviewing this fund every year till it passes the 3-year test. Okay. Let us see the fund performance parameters now. So the first parameter is standard deviation. Okay. So the standard deviation gives an idea about how volatile fund returns has been in the past 3 years. Higher the standard deviation, higher is the volatility of the fund. But as we can see, this fund is just a year old. So we just can't judge it based on 1 year performance. We have to wait for 3 years minimum. Okay. As we can see, the standard deviation is less compared with the category average. So this is good for now. But then as we know, we have to see at least 3 years data. Okay. Let's see the second parameter. So the second parameter is beta. Now I keep on telling in each of my video what is beta, and I hope the viewers who are watching my channel, they know what beta is by now. Okay, and I'll keep repeating this till the time you guys learn about this. So beta gives an idea about how volatile fund performance has been compared to similar funds in the market. Lower beta implies the fund gives more predictable performance compared to similar funds in the market. A beta greater than 1 indicates that the stock price is more volatile than the overall market. A beta less than 1 indicates that the stock price is less volatile than the overall market. And a beta of 1 indicates that the stock moves identical to the overall market. Right? So this stock, as we can see, this fund basically, it has less volatile, okay, compared with the category average. Okay, the third parameter is Sharpe ratio. Sharpe ratio indicates how much risk was taken to generate the returns. Higher the value means fund has been able to give better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. Now, as we know, we won't be able to judge much because this fund is yet to complete its 3-year period. So let's wait for that. The alpha indicates how the fund has generated additional returns compared to the benchmark. As of now, we can see, I mean, it's a poor alpha. Okay. Let us now see the benchmark comparison. So since the time this fund has been started last year, as we can see, this fund is below the index, means it is not able to beat the index. Okay, but now as you can see from May 22, you know, it is starting to come up with the index. It is going parallel with the index. Okay, so maybe in the coming years, like that is after a year or after 3 years or 5 years, this will surpass the benchmark. We'll just have to wait and watch for that. Okay, so as I said, we will keep on reviewing this fund every year to see how it goes. So if we invest 5,000 per month as an SIP in this fund with the same expected returns of 8% per year for the next 30 years, what would happen? So for 5 years, our invested amount would be 3 lakhs, estimated would be 69,834, and the total including the invested plus estimated would be 3,69,834. For 10 years, the invested amount would be 6 lakhs, the estimated amount would be 3,20,828, and the total would be 9,20,828. For 15 years, the invested amount would be 9 lakhs, the estimated amount would be 8,14,726, and the total would be 17,14,726. For 20 years, the invested amount would be 12 lakhs, the estimated returns would be 17,64,736, and the total would be 29,64,736. For 25 years, the invested amount would be 15 lakhs, the estimated returns would be 32,86,833, and the total would be 47,86,833. And for 30 years, the invested amount would be 18 lakhs, estimated returns would be 57,01,476, and the total including the invested plus estimated would be 75,01,470. Now what we are going to do is we'll be putting 50 lakhs out of this amount into SWP, and we will see what happens then. So we are putting 50 lakhs into SWP, and we will be doing a monthly withdrawal of 25,000 with the same assumed rate of 8% for the next 30 years. Okay, so for 5 years, the invested amount would be 50 lakhs, the withdrawal amount would be, so means the withdrawal which we will do in 5 years would be 15 lakhs, and the total would be 55 lakhs 23,024. For 10 years, invested amount would be 50 lakhs, the withdrawal would be 30 lakhs, and the total would be 62 lakh 91,518. For 15 years, the invested amount is 50 lakhs, withdrawal is 45 lakhs, and the total is 74 lakh 20,688. For 20 years, the invested amount is 50 lakhs, withdrawal amount is 60 lakhs, and the total is 90 lakh 79,809. For 25 years, invested amount is going to be 50 lakhs, withdrawal which we would have done would be 75 lakhs, and the total would be 1 crore 15 lakh 17,602. And for 30 years, the invested amount is going to be 50 lakhs, the withdrawal which we have done would be 90 lakhs, and still we will be having a remaining total of 1 crore 50 lakhs 99,520. Okay, so let's move ahead. Let us now compare this fund with the other funds available in the market, that is the fund of funds. Okay, so for 1 year, this fund has given 3.87%, Aditya Birla has given 0.06% return, ICICI has given 5.58% return, Kotak has given 2.88% return, Franklin India has given 8.50%, and Mirae Asset has given minus 2.55%. For 3 years, Aditya Birla has given 12.46% returns, ICICI has given 12.66% returns, Kotak has given 6.11% return, and Franklin India has given 8.15% returns. For 5 years, Aditya Birla has given 9.19% returns, ICICI has given 10.99% returns, Kotak has given 12.13% return, and Franklin India has given 8.07% returns. And since inception, HDFC fund allocator has given 8.90%, Aditya Birla has given 9.90% return, ICICI has given 11.60% return, Kotak has given 13.75% return, and Franklin India has given 9.94%, and Mirae Asset has given 20.87% return. See, the other funds which are there, and now they may be investing in debt plus equity, but Mirae Asset is only equity. Okay, it is equity allocated fund of fund, so it is investing only in equities, so it may give a good returns over a period of time since it is only equity. But with the rest of the funds, they are also investing in debt plus equity, and as you can see, for example, Aditya Birla, it is giving a return of 9.9%, ICICI 11.6, Kotak 13.75, Franklin India 9.94. So the means the minimum expectation or the maximum, basically from minimum to maximum, is 8 till 14%. That's what we can see in fund of fund funds, basically, where they are investing both in equity and debt. So I hope you got this idea now what is fund of fund and how it is investing in other funds, including your equity and debt, and if it's pure equity, what returns it will give. Thanks for watching. Please note, mutual fund investment are subject to market risk. Past success does not guarantee any future performance. If you have any goals like buying a car, home, children's education, international holiday, retirement, then please fill your data by clicking on the link given in the description, and I will do the portfolio review absolutely free of cost. Please comment and let us know how did you like our video. Also, if you are new to our channel, then please subscribe and hit the bell button next to it. Don't forget to create your free lifetime account on AssetPlus for investment in mutual funds. That's all for now. See you in the next video. Till then, take care.